Assalamualaikum. My name is Nurfardini binti Nazli. My metric card number is 2023103345. In our presentation today, we will discuss about the ratio analysis. Move on to the business background that we choose Panasonic Manufacturing Malaysia Sdn Bhd. Panasonic is a manufacturing subsidiary of Panasonic and Japanese manufacturer of household appliances and electrical items. Panasonic was founded in 1965 and renamed Matsushita Electric Company Malaysia Berhad 40 years later. Panasonic major products are electrical and electronic equipment. The company has two branches in Shah Alam, Selangor. In 1927, Panasonic produced a series of bicycles which were sold for the first time under national brands. Panasonic brand name has emerged as one of the most welcome and trusted brand names for electrical home appliance chosen by most Malaysian households. Throughout the years, the corporation has observed a swift progress from its humble start as producer of dry cell batteries to Malaysia's leading manufacturer of sophisticated electrical appliances. It also produces and sells electronic equipment and supplies, for example, home appliances and fan products are two-man's company segment. The very first objective of a studies of Panasonic is to analyze Panasonic financial condition related ratios. Second, to identify whether the company able to continue their upcoming operation and find the best one among 2 years. Third is to collect information needed from statement of financial position between 2021 and 2022. Lastly, to identify relevant data before proceed the calculation process.
Assalamualaikum, my name is Nur Shamimi binti Shahrani. My student ID 20233676 and 73. So, I will presenting about literature review of Panasonic Manufacturing Malaysia Berhad. So basically, Panasonic Manufacturing Malaysia Berhad is a subsidiary of the global electronic giant Panasonic Corporation, and it has played a significant role in the Malaysian manufacturing landscape. This literature review aims to provide insight into the company's operation, achievements, challenges, and its impact on the local and global economy. So Panasonic Manufacturing Malaysia Berhad was established in 1965 and has been a key player in the Malaysian electronic industry. The company's growth and evolution are integral to understanding its current standing and future prospect. So the study explored the historical evolution of Panasonic Manufacturing Malaysia Berhad, examining its development within the framework of Malaysian industrialization. Panasonic Manufacturing Malaysia Berhad has gained attention for the commitment to operational excellence. The literature emphasized the importance of innovation in sustaining competitiveness. Investigation Panasonic Manufacturing Malaysia Berhad investment in research and development R&D. This section explored the company initiative, collaboration, and contribution to technological advancements in the electronic sector. Companies' engagement in corporate social responsibility (CSR) is increasingly under scrutiny. They have explored Panasonic Manufacturing Malaysia Berhad CSR practice, analyzing its impact on local communities and environmental sustainability. So, understanding Panasonic Manufacturing Malaysia Berhad position in the market is a crucial. Economic study examine the company's market share, competitive strategies, and respond to industry dynamics. Additionally, comparative analysis with other players in the Malaysian electronic industry provide insight into the Panasonic Manufacturing Malaysia Berhad competitive advantage. No organization is without challenges. Research by Matsushita Group 2005 investigates the obstacles faced by Panasonic Manufacturing Malaysia Berhad, whether they be economic, technological, or regulatory. This section also discusses the company's strategic response and forecast its future trajectory.
Liquidity ratio. It is a general indicator of a company capacity to fulfill impending or short-term obligation. The higher liquidity is typically desirable because it denotes a greater capacity to pay short-term obligations when they become due. Current ratio. If we take a look to the graph from year 2021 to year 2022, the current ratio is decreasing. In year 2021, the current ratio is 4.38 times compared to year 2022. The current ratio is 4.21 times. It shows Panasonic has capability to pay for RM1 of its short-term obligations on time in 2021 and 2022. Next is quick ratio. The quick ratio is also decreasing. In year 2021, it's 3.95 times, while in year 2022, it's 3.61 times. It shows that in year 2021, Panasonic has less capability to make current liability with its most liquid asset than in year 2022. Lastly is net working capital. The net working capital for year 2021 is RM 538,641 ringgit, while in year 2022 is 487,120 ringgit. It shows that Panasonic have a positive of net working capital that indicates the amount of current assets that are financed with long-term financing.
Activity ratios, also known as turnover ratios or efficiency ratios, are financial metrics that assess how efficiently a company utilizes its asset to generate revenue and manage its operations. This ratio provides insight into the effectiveness of companies' operational activities. There are 4 types of ratio, which are: first, inventory turnover ratio. The inventory turnover ratio is a financial metric that measures how many times a company inventory is sold and replaced over a specific period, usually a year. It is a key indicator of how efficiently a company manages its inventory. From the data, the inventory turnover ratio has decreased from 11.38 times in 2021 to 8.62 times in 2022. This suggests that, on average, the company took longer to sell and replace its inventory in 2022 compared to 2021. A decline in inventory turnover can be indication of potential issues such as overstocking, slow-moving inventory, or changes in market demand that affect the sale of inventory. Second, average collection period. The average collection period, also known as days receivable, is a financial metric that measures the average number of days it takes for a company to collect payment from its customer after a sale has been made. It provides insight into how efficiently a company manages its account receivable. As we can see, the ACP has increased from 39 days in 2021 to 42 days in 2022. This indicates that, on average, it took the company longer to collect payment from its customer in 2022 compared to the 2021. An increase in the average collection period can impact the company's cash flow. It means that funds are tied up in an account receivable for a more extended period, potentially affecting liquidity. The third is fixed asset turnover ratio. The fixed asset turnover ratio is a financial metric that measures how efficiently a company utilizes its fixed assets such as property, plant, and equipment to generate sales revenue. It indicates that relationship between the net sale and the average value of fixed assets during a specific period. As we can see here, the fixed asset turnover ratio has decreased from 7.05 times in 2021 to 6.05 times in 2022. This suggests that, on average, the company generated fewer sales relative to its net fixed asset in 2022 compared to the previous year. A decline in the FIN430 may indicate reduced efficiency in utilizing fixed asset to generate sales. It could be due to factors such as underutilization of capacity, changes in production processes, or shift in market demand. Number 4, total asset turnover ratio. The total asset turnover ratio is a financial metric that measures how efficiently a company uses its total asset to generate revenue. It provides insight into how well a company manages its asset to produce sales. From the data, the total asset turnover ratio has decreased slightly from 1 time in 2021 to 0.95 times in 2022. This indicates a small reduction in the company's ability to generate sales from its total asset. A decrease in TATU may suggest a decrease in the efficiency of using total asset to generate sales. This could be influenced by factors such as changes in operational efficiency, shift in product mix, or changes in market conditions.
Assalamualaikum, my name is Nadia Atira binti Mata Jamali. Today I'm going to present about leverage ratio. What is a leverage ratio? A leverage ratio is any kind of financial ratio that indicates the level of debt incurred by a business entity against several other accounts in its balance sheet, income statement, or cash flow statement. The first ratio is debt ratio. The debt ratio is the percentage of the firm's total asset given by the creditors. The higher the ratio, the greater the risk of bankruptcy. Debt ratio is a financial ratio that measures the extent of a company leverage. From the circulation, we can conclude that in 2022, the company has a higher amount of debt rather than 2021. That means Panasonic poorly managed its debt and financing in 2022, as it reports a higher debt ratio and show more risk in the year 2022. Secondly, debt to equity ratio. The debt to equity ratio is the percentage of long-term debt relative to the firm's equity. Measure how much debt a company used to finance its asset compared to the shareholder equity amount. The higher the ratio, the more the company relies on the long-term creditors and supplier capital rather than owner money. So, based on the circulation, we can see that the debt to equity was increasing from 19.67% in 2021 to 19.93% in 2022. This means that the company is considered a higher risk to lenders and investors because it suggests that the company is financing a significant amount of its potential growth through borrowing. Next is time interest earned. Time interest earned is a measure of firm's ability to make interest payment and the extent to which earning can decline without resulting in financial embarrassment due to its inability to meet annual interest costs. A higher ratio signifies greater capability and a reduced risk of default. So based on the circulation, we can see that the time interest is decreasing from 20.91 times in 2021 to 3.47 times in 2022. This can be concluded that the firm does not have ample funds to pay interest charge on loans. That's all from leverage ratio. I will pass to the next presenter. Thank you.
Assalamualaikum. My name is Amira Adriana binti Badru Afzan, number metric 2023-114329. So I will continue for the Panasonic's profitability ratio. Financial ratios are financial metrics that assess the company's ability to generate profit from its operation relative to its revenue, assets, or equity. It relates to the firm's ability to satisfy the firm's goal to maximize the owner's wealth, to attract new capital, and to grow over time. The first profitability ratio is GPM. This ratio measures the firm's ability to control the cost of goods sold relative to its sale revenue or the relative contribution margin from sales. The better for the company, the higher the gross profit margin. Based on the calculation and graph above, the Panasonic's gross profit margin for the year 2021 to 2022 shows a decreasing ratio from 18.69% to 10.61%. The lower gross profit margin indicates that the company is generating less profit from its core business activities and it may be facing challenges in controlling production costs or pricing its products competitively. Next is operating profit margin. This ratio measures the productivity of asset in providing returns to both creditors and stockholders. Higher ratio indicates better productivity. Based on the calculation and graph above, the operating profit margin for the year 2021 to 2022 shows a decrease from 10.73% to 3.60%. It means in 2022, Panasonic may be facing challenges in managing its operating expenses relative to revenue. Moving on is net profit margin. This ratio measures the after-tax profit per ringgit of sales after deducting all expenses including interest and tax. The ability of the firm to get higher returns indicates a better growth prospect and therefore higher margin is preferable. Based on the calculation and graph above, net profit margin for the year 2021 to 2022 shows a decrease from 11.95% to 5.93%. A lower net profit margin indicates that a company is earning a smaller percentage of profit relative to its total revenue. It means that in 2021, Panasonic is more efficient at converting their sales into actual profit and able to generate net earnings to shareholders because having a higher net profit margin than 2022. Last but not least is ROA. This ratio measures a firm's overall return on all of its assets investment. ROA indicates the productivity of assets in producing revenues and the firm's ability to control costs in its operations. Therefore, higher ratio is better. Based on the calculation and graph above, the ROA shows a decrease from 11.97% to 5.61%. A lower ROA suggests that a company generating less profit relative to its total assets. It shows that the company is able to generate a profit of 1197 cent for 1 ringgit investment in its asset in 2021, while 0561 cent for 1 ringgit in 2022. The last profitability ratio is ROE. This ratio measures the rate of return on the investment of the common stockholders or net worth. Higher return is better as it indicates higher return for the owners of the firm. Based on the calculation and graph above, the return on equity for the year 2021 to 2022 shows a decrease from 14.33% to 6.73%. The lower return on equity suggests that a company is generating less profit relative to its shareholders' equity.
Market ratio. What is market ratio? Market ratio are financial metrics that measure and analyze stock prices and compare market prices with those of competitor and against other facts and figure. The ratio is earning per share. Earning per share is the amount of profit allocated to each outstanding share of common stock of the corporation. It denotes the amount of profit or earning that investor can expect to gain from each share purchase. So from the calculation, we can conclude that in 2021, Panasonic will be more profitable, which is 1 ringgit 91 cent, because it is considered a company able to allocate a good profit for each outstanding share of common stock, rather than in the year 2022 with 84 cent.
In conclusion, we may evaluate Panasonic's overall performance and sustainability based on the financial analysis. Financial ratio analysis that has been made, including the company liquidity ratio, activity ratio, leverage ratio, profitability ratio, and market ratio for both years. By using the formulas for each of the ratios, we can inspect the company's performance well. By looking at the overall performance of Panasonic and also their ratio analysis, the performance is good, but it needs to improve more. We also can conclude that when compared to 2022, 2021 is the best year to invest in general welfare. Lastly, in comparison to 2022, Panasonic performs well overall in 2021. This gives an important aspect to investors to think well about the company's reliability in generating returns for them. So that's all from our group. Thank you.